Good afternoon. Thanks for joining us today. We have Northern Vertex presenting. CEO Ken Berry is going to walk us through the story. Before we get started with that, first I would like to remind everyone that this presentation will contain forward-looking statements. You can find out more about those on the company's disclosure on their website. And there will be a Q&A section at the end, so feel free to input your questions in the Q&A box at the bottom, or you can email them to me. And with that out of the way, I'd like to introduce Ken Berry. It's the second time he's done a webinar with us, so some of you are probably familiar with him. But thanks for joining us again, Ken.
Deborah, thanks for having me on and allowing me to tell the Northern Vertex story and about the Moss mine that's up and running down in Northwest Arizona.
Well, a lot's changed since we first started speaking in July, so I think it's a good opportunity to run through some of the updates on the cost side, as well as you're now an exploration story, which is very exciting. So I'll let you walk through the story and then give us a bit of an update.
Okay, I'll walk through it quite quickly, Deborah, and then we can open it up for some questions. But just to reacquaint your listeners to Northern Vertex, we're an open pit heap leach operation. We're located about an hour and a half south of Las Vegas, and we're just 10 minutes outside of the town of Bullhead City. We have currently 150 men and women working on site in the area of Bullhead City. We're the largest pure gold and silver producer in Arizona. We've got an exploration program which is underway. That started up in May and it's continuing on. We'll spend about $2.5 million on this exploration drilling program between now and the end of February. So lots of activity, lots of news releases coming and information on new drill holes. In addition to that, we had our strongest quarter ending September 30th. We had 27 million in revenue. That's US 27 million, produced just under 15,000 ounces of gold equivalent. That was about 13,500 ounces of pure gold. So it's exciting times for Northern Vertex and our shareholders and the staff down on site who have really grown this company from what was an exploration company, went right through the construction phase and commissioning and into full-on production. So we're very pleased with the activities. Why don't I continue on then, and I'll just run through the slide presentation. I'll go quite quickly because I know some of your listeners have seen this before. So here's your standard forward-looking statement. I'll leave that for your listeners and viewers to visit our website, and you can review in more detail. Just talking about some of the investment highlights, we've got solid production base with that, as I mentioned, just under 15,000 ounces in gold equivalent for the quarter ending September 30th. We did that with cash costs in around $862. We expect our cash costs and AISC costs to come down as we move forward. We've had a lot of cost optimization underway. We've had situations such as a power line, which was brought to site just in the last 6 weeks, and that replaces 8 diesel burning generators. So that was exciting. It's cut down our costs, probably reduce the cost of the company about $2 million or more over the next year. We've had significant resource growth, or we intend to have that resource growth with the drilling that's underway. Our goal is to double the current global resource, which sits just under 500,000 ounces of gold and 5.8 million ounces of silver. And with that resource growth, we expect to extend the mine life. We're targeting some district scale situations, and those are within 1.5 kilometers of our open pit to the west and also a couple kilometers to the south. So we've got over 150 mining disturbances on our property alone. So lots of targets, lots of opportunity for resource growth. We've been strengthening our balance sheet by deploying free cash flow to reduce debt over the last 12 months. We expect to reduce our debt by about $13.5 million. And as I mentioned, we've had some transformational investments, the power line being first and foremost. We're also looking at increasing our crush size from 1/4 inch to 3/8. We've implemented an ILS system, that's a solution management system. So lots of developments underway. We've replaced our mining contractor here in the last couple of months. So that's exciting as well and expected to reduce costs. And we believe, being located in Northwest Arizona, we're the largest pure gold and silver producer. We feel that the Moss Mine offers an excellent platform for growth. So I would expect you'll see consolidation in the western states of some of these gold projects, and certainly I think we can be a leader in that field. Here you've got our capital structure, 251 million shares outstanding, options of 13 million, warrants of 93 million, Current market cap sitting in at around 150 million. We've had a high of 72 cents, low of 24 cents. Cash position at the end of September was 12.1 million US, and that's growing weekly. And we've got key shareholders and stakeholders, which include Greenstone Capital and Mavericks Metals. Nomad owns a royalty on the company, and we've got a strong contingent from Switzerland with high net worth private banking. So a very good shareholder registry. Our financings, which amount to more than 100 million for the growth of this company, have all been non-brokered. What we're seeing now is we're getting a lot of the brokerage firms reaching out to us and looking for a way that they can participate in the growth of Northern Vertex. And as I mentioned, we expect to see consolidation in this US marketplace. So we're certainly going to be one of the leaders in that field. We talk about our experienced management team. We've got access to capital, raised over 100 million to develop this project. We've got exploration experience. Jim McDonald is one of the founders and directors of Northern Vertex. He was a founder of Alamos Gold, sat on their board from when they were a 20 million market cap company to over a $2 billion market company. We've got Jeff Burns, who was the CEO of Pan American and is currently the chairman of Mavericks Metals. We have Mike Haworth, who was head of metals and mining for JP Morgan and is a founder of Greenstone Capital, one of our cornerstone investors. We've got Dave Farrell on our board. He worked with Endeavor. That was Frank Juster's group doing M&A for them. So he certainly has played an instrumental role in our development. And we have Tiziano Romagnoli, who is one of our advisors and was head of the BMO office out of Geneva. He's been instrumental in raising the first 50 million for the company, primarily out of Switzerland. So very strong contingent of directors and management. Joel Murphy is our GM down on site, and he was head of Florida Canyon for over 25 years. And why is that important? Well, Florida Canyon is one of the lowest cost producers and lowest grade deposits in all of Nevada. So Joel is applying those experience and techniques to the Moss mine. We also have Dave Splett as our CFO, and Dave was the CFO for Goldcorp in South America. He worked with Teck and Mosaic as well, so he brings a tremendous amount of experience and has cleaned up our balance sheet over the last 9 months since his arrival. This is a little bit more detail on some of our directors. I'm a former investment advisor, one of the founders of Kootenay Silver, as well as the founder of Northern Vertex. So I would encourage you to visit our website, learn a little bit more about some of the other individuals involved with the company. This just shows you where we're located. We're in that Walker Lane gold trend. We're down in northwest Arizona in the district of Oatman. This produced over 2 million ounces of gold. It was primarily known for its high-grade deposits. So we're mining the Moss structure. Our open pit is expected to be 1.5 kilometers in length, and the structure runs for 5.6 kilometers on surface. So we're very optimistic that we'll be expanding that pit beyond that 1.5 kilometers. We also have some high-grade areas, such as the Ruthane, and you'll see a couple slides in a moment. That Ruthane sits just 160 meters off the open pit, and it offers us some very high-grade gold intersections. Here you see some of our records set for the quarter ending June 30th, revenue of 27 million, production just under 15,000 ounces of gold equivalent. We had single daily records of 195 gold ounces. We've had days where we've surpassed 230 ounces a day. Cash 12.1 million, and that's growing weekly. Here you've got some of the production, and this just shows you a bar graph of our production increasing quarter over quarter. And as we talked about, we're optimizing this operations with the power line that's reducing our costs, and the solution management plan, increased crush size, and we've replaced our mining contractor as well. So lots of optimization measures underway at the Moss mine. We talk about the foundation for growth and maximizing shareholder value. It really all starts with the resource growth. So we're sitting at just under 500,000 ounces of gold, 5.8 million ounces of silver. And as we drill and expand this resource, I would look for a new life of mine plan. And this will set us up for scalability, looking forward in the future here, reducing costs. We've been implementing those optimization measures underway with an ultimate goal really to lower our cash costs and AISC costs as the mine moves forward. But it's all starts with that resource growth. That's the foundation, and then you start to debottleneck the operation after that. Here you see our resource 3D model, covers 1.5 kilometers, sits in just under 500,000 ounces of gold. As I mentioned, it's open at depth. It's open to the east and the west as well. So lots of opportunity for resource growth. And this is just in and around our existing open pit operations. This doesn't take into account many of the other targets, which I'll show you in another slide. But we're definitely testing with 3 drill rigs currently, drilling in and around this pit. And we're testing that Ruth vein, which offers us the high-grade system in close proximity to the moss. So here you see the district scale potential of our 10,000-acre land package. We call it the hub and spoke model. You see the highlighted open pit, the moss open pit, the top portion of the screen there, the infrastructure in the middle. And we've got numerous targets. These are priority targets. As I mentioned, we've got over 150 mining disturbances on our property alone. But the targets of real interest here over the next 3 to 6 months, with our current program underway that has 3 drill rigs active, is expanding the resources in and around the moss open pit. And that's in an area called the Gold Bar Zone, and the Gold Bridge Zone, and the Gold Tower Zone, as well as the Ruth vein. So we'll be testing out to the west, the moss extension. That's about 1.5 kilometers from the open pit. And then we'll also be drilling the west open. That's 2 kilometers to the south. Here you see one of our 3 drill rigs on the edge of our central pit. And this has been active here for the last couple of months, drilling in and around that pit, expected to add ounces to our current resource once we get around to doing that updated resource. On the top portion of this slide that I'm showing right now shows you a plan map. You see the open pit spanning that 1.5 kilometers and the Gold Bridge Zone. And I'll just take a cursor and highlight. This is the Gold Bridge Zone where that drill rig that you saw on the previous slide is located. And this is expected to connect the west pit and the central pit. We're also drilling in the Gold Tower Zone. So the second rig is at the Gold Tower Zone. Third rig is stepping out across this Ruth vein. And the Ruth vein dips down to the north. The moss dips to the south. They intersect at depth at about 650 feet. And when you drop down to the lower portion of this slide, you see this geological contact zone with a dotted line. And that is where the moss vein and the Ruth vein intersect at depth. So we're testing that zone currently. We'll be drilling across this from west to east and testing this zone. And I fully expect to see additional ounces added at depth as well as on strike. And it's going to be very interesting to see how this Ruth vein materializes and develops here as we do additional drilling. This is a cross section of the moss vein and the Ruth vein with the stockworks in the center here. So you see the moss dipping to the south. The Ruth vein dips to the north. They intersect at depth. That was that contact zone that we talked about. This is one of the prime geological contact and targets that we intend to drill, and we intend to drill this right across that east-west direction. We've mapped it on surface for over 2 kilometers, and we've drilled currently about 650 meters of that 2 kilometers. So lots of results to come. Here you see one of our first drill intersections from that Ruth vein. It was hole 286, and we encountered 15 meters of 9 grams gold, 85 grams silver. That included 6.1 meters of 21 grams gold, 211 grams silver, and 1.5 meters of 69 grams gold and 716 grams silver. So those are spectacular results. And when you put them in context of the moss vein, which we're currently mining and produced almost 15,000 ounces of gold for the quarter ending September 30th at an average grade of 0.7 grams per ton in this moss vein and also the hanging stockwork system here. So this Ruth vein offers us some tremendous grade increase, and we're excited to be testing that zone across the 2 kilometer strike length. And here's a few more drill intersections from that Ruth vein. Here you see 6.1 meters of 9.7 grams gold. And this particular fence of holes was 180 meters to the east of that last intersection that we saw at hole 286. We've got hole 314, which had 15 meters of 0.83 grams gold. And then at depth, we had 109 meters of 0.79 grams gold. So lots of mineralization here. We intend to continue drilling that and understanding that structure a little bit better here as we move forward. The current slide you see up is a West Oatman, and this is located 2 kilometers to the south of our open pit. Again, we hit some very nice ore grade intercepts, 53 meters of 0.81 grams gold. That included 1.5 meters of 9.7 grams gold, 275 grams silver, 10 meters of 2.2 grams gold, and 55 grams of silver. So this is another area. This is 2 kilometers to the south of our open pit. The West Oatman runs from east to west. It's about 4 kilometers in strike length. So it'll require much more drilling, but we see this as an opportunity for a new discovery and a maiden resource. So this will be an area that we'll focus on here in the next year or two. So just to highlight some of those results that I touched on, you can visit our website to see the complete drill intersections. On the top portion of this slide, it has the Ruth vein. You see the 15 meters, 9 grams gold, 6 meters, 21 grams gold, 1.5 meters of 69 grams gold, and 6 meters of 9.7 grams gold. Lots of splashy numbers there, and lots more drilling to come and results to come. In the center of this slide, you just see that ore grade, kind of a sea of ore grade material there that we're expecting to add ounces to our current resource. And then the bottom portion of the slide, that is a West Oatman. The 3 rows, you see the 53 meters of 0.81 grams gold, 10 meters, 2.2, meter and a half of 9.7 grams gold. So again, lots of ore grade material, and this is a completely different structure than the open pit that we're currently mining. So lots of drilling underway, lots of results to come. I think that's the message. Here you see a picture of our central pit, and the right in the forefront there, you see the Moss vein on the left-hand side of the page with the dotted line, the Ruth vein, and they do intersect at depth. So the central pit is down at about 350 feet currently. The east pit has just started to ship ore to our crushers, and then the west pit is where we have pioneering underway. Another slide which gives you a view from the east portion of the property looking west, and you see that east pit right in the forefront of the photo there with a couple drill rigs, drill rigs getting ready to do a current blast and ship ore off. Moss vein dipping to the south, Ruth again dipping to the north, the central pit in the middle of that screen, the west pit. So this is about 1.5 kilometers in strike length currently, but 5.6 kilometers is the entire strike length of that Moss structure. I would encourage you to visit our website. You see a collage of photographs here. You see a 3D modeling program called Verify. If you visit our website, it'll allow you to surf around, get a better understanding. You'll notice that our mine site is very compact. Lots of activities happening, over 150 men and women working on site. We've got 100-ton trucks, 70-ton trucks, articulated trucks, a lot of activity underway. So you see the open pit on the far right-hand side of this page, the crushers next to that on the left, the leach pad in the center, and the Merrill Crowe facility on the left-hand side of the page. This is our resource growth charts. We had drilling last fall. We drilled about 14,000 feet of drilling, increased our resource by over 120,000 ounces, mostly inferred. And our current program is a 32,000 meter program, and it's targeting that high-grade Ruth area with some infill drilling, and we're stepping out to the West Oatman looking for a new discovery. So we fully anticipate to see a significant amount of resource growth, which will result in a new life of mine plan moving forward in the future. So just to summarize, we're maximizing our free cash flow. We're driving down operational costs with the power line solution management plan. We've got the exploration program underway. The goal is to double the size of the Moss resource. So I think, Deborah, you've talked about this no longer just being a ramping up production story. We've also got an exploration side to this, and I think that's really expanding on the story, adding a different component to this. We now have the organic growth through the drill bit as well as the potential for consolidation within the sector. So we've been strengthening that balance sheet by paying down debt over the last year. We paid off our Sprott loan in August, and the Greenstone debenture is expected to be cleared up by December 1st. And that positions us for consolidation within that US marketplace. We have an excellent management team. We're proven financial operators and operational team. So very strong. I think for a junior mining company, you don't get any stronger than our board of directors with gentlemen such as Jeff Burns on our board, Mike Haworth and Dave Farrell and Jim McDonald. So I think we've definitely rounded our story out. And with that, more than happy to answer any questions.
Sure. Thanks, Ken. That was a really thorough explanation. So I have one question. What's your cash position and how much cash are you building on a quarterly or monthly basis right now?
Well, we're sitting at the end of September, we had 12.1 million US in cash, and that's continuing to grow. We are deploying some of that free cash flow, as I mentioned, to pay down our debt. So we've paid in the last year, we've paid down we will have paid down close to about 13 million in debt. And we're also looking at making some long-term investments. And that's one reason why when you see our cash costs at $862, we implemented that power line. And we're also looking at increasing our crush size and expanding a leach pad. So we're making some long-term investments back into the company, which are expected to lower our cash costs and AISC costs as we move forward.
Okay. And you have almost 45 million 40-cent warrants expiring in December. Will those be exercised or extended? Do you have plans around what you're going to do with all those warrants when they come in?
Well, those warrants, and that's a big question. We have an $8.5 million CD, which expires on December 1st, and we have warrants which expire December 11th. So those warrants are expected to yield about 19 million to the company, and they're in the money. So I guess we'll just have to wait and see what the holders of those warrants do. But one way or the other, the treasury is going to be much stronger, or you're going to see those warrants expire. One of the two.
Do you have a forced acceleration or an early acceleration feature on them?
No, we don't.
Okay. And what would be the use of proceeds if you were to get all of those warrants coming in?
Well, we're currently drilling. We've just increased our drill program, extended it. We're spending $2.5 million US in the next 4 months. And I would expect that drill program will continue after that February date. So really, when you look at the Moss Mine and take a broader regional view, I was down last week on site, and I can tell you it's just endless targets out there. So I would imagine that you'll see a lot more drilling, a lot more opportunity to expand the resource and really change the narrative from a 500,000 ounce global resource to, my goal is to make this a multi-million ounce deposit. So I think that you'll see a lot more drilling in the future.
Okay, and so that you said 2.5 million budget for drilling in the next program?
2.5 million over the next 4 months.
That's US dollars?
That's US dollars, yeah.
And remind me how many meters or feet that is? That'll
be about 18,000 meters of drilling. And as I mentioned, we've been drilling since May, and the program that we initiated was about a $2.5 million program from May until November. And without interrupting that program, we approved an additional $2.5 million for the next 4 months. And I would anticipate that and we added a third drill rig to the site as well. I would anticipate that you'll see that program continue, if not ramp up further. So we're pretty excited about the results we've had to date. And as I mentioned, it is just endless targets in and around the open pit as well as in surrounding areas. So really, we now have that organic growth opportunity here, and we're taking full advantage of it as we're ramping up our free cash flow.
And can you break down that drill program? I think you might have mentioned it earlier. How many meters are you focused on in pit versus surrounding areas?
The current program right now is almost exclusively drilling in and around the pit and testing that Ruth vein. So as we see, if you can see this slide that I have up currently, we have one drill rig testing this Gold Bridge zone. So this was previously expected, or there was next to no drilling in this area. And the feasibility study had called for two separate pits here, a western pit and a central pit, and they were divided by high walls. We've been drilling in this area since May, and we're hitting mineralization throughout. So we expect this to be one continuous pit, and you can imagine that is adding a lot of ounces to our resource. And then we have a second drill rig testing the Gold Tower zone, and then our third drill rig is testing this Ruth vein, and this is the high-grade system that moves from east to west. And so we're stepping across here, drilling fences, moving to the east. Now, this is the plan from now until the end of February, after which I would likely see us stepping out into some other areas, probably going out to the western extension, moving to the east. But currently, when you're looking at adding ounces and really helping clarify our developing mine plan, we want to be drilling in and around the open pit. And this is as much for planning as for adding ounces. When you look at this long section on the bottom portion of this slide, you see that contact zone. That's a prime area there for additional ounces and also high grade results. And then at depth here, you can see where we could have the opportunity to add additional ounces as we drill at depth. So we certainly will be testing these areas. We're drilling at depth. We're testing that Gold Bridge zone and also the Gold Tower zone. You have the Mordor, which is just to the west of the open pit. There's currently about 40 drill holes, and they're limited to about 100 feet there. But those 40 drill holes were almost exclusively ore grade material, and that's an area that we'll also be stepping out to expand that western pit. So to answer your question, this is a program which is focused on adding ounces and identifying some high grade results.
Okay. And then I guess the other question I had is, so you've had a very successful drill program so far this summer and fall. Why wasn't this drilled before? Was it simply a lack of funding? Was it that you were getting bootstrapping to small scale production with the intention of exploring later? Maybe you can give us some context around why you're having these high grade hits.
Yeah, just to answer your question, it was a lack of funding. When you think we raised $50 million to move from exploration through pre-feasibility, feasibility study, a test mining facility, and then we raised another close to $50 million to put this into production. And as we went into production in 2018, 2019, we hit some speed bumps along the way, not unlike a lot of startups and projects which are moving through that construction, commissioning, and into full-on production. And as we were hitting those speed bumps, we had to focus on working capital. We weren't able to explore and step out to these areas. Now that we're free cash flowing and our production is ramping up, we now have the opportunity to do exploration and to expand on that exploration. So that's really why we hadn't conducted more exploration in the past. The entire focus was on production, and now we've got free cash flow and we can explore this property and really demonstrate the upside here with organic growth.
I think that's one of the interesting angles of the story, is that you are free cash flowing. You have this nice producing asset. You have a lot of potential resource upside in pit, as well as a ton of targets across the property. Plus, I think you potentially have some M&A opportunities in state and in other areas. So, you hear these companies when they're pre-production talk about getting to production to bootstrap exploration, like you're already there, which is interesting because not a lot of companies make it to that point. So congratulations.
Well, thank you very much. And it's certainly been an interesting ride. When you look at this current slide up there, you look at the top right-hand portion of this slide, that's what the Moss vein looked like when we first arrived in 2011, 2012. You can see that ore body poking right out of the surface. And then you see on the bottom portion of this slide where it's at today. So we're pretty excited to have taken this property right through that exploration phase. I mean, when you look at any aspect of the mining business, this is probably the most challenging, is moving from exploration through to production, and especially when you have a single asset company. So that's one of the reasons why we're motivated now to start looking further afar, utilizing the Moss as a platform for growth. And we have a team of 150 men and women, which we can leverage off. And so to start from scratch and get to where we are today is a big accomplishment. And I just have to congratulate all our operations team and the finance group. So job well done.
Definitely. And I'm not seeing any other Q&A coming in. So maybe you can just summarize what Northern Vertex is, where you see it going, and maybe outline a few catalysts that the market can look for in the coming months.
Well, again, I think we're changing the narrative here. This in the past has been branded a 40, 50,000 ounce producer, 500,000 ounces, and a very successful mining operation. But now with the exploration program underway, we've got the opportunity to rebrand this company and really establish a much larger resource with the drilling that's underway right now. So as we grow that resource, that's the foundation for this growth and the opportunity to scale up the project well beyond that 50,000 ounce production profile. And I think that's what gets very exciting. That's what motivates me, is to see the opportunity here to move from, say, a 40, 50,000 ounce producer into that 100,000 ounce beyond, and establish that it's a multi-million ounce deposit. So we've got a lot of work to undertake here. The drilling's underway, but I'm very optimistic about the future for the Moss Mine and Northern Vertex. So, to summarize it, we've got a tremendous amount of activity underway. We've got two opportunities for growth here: organically with the drill bit, and second is consolidation within the U.S. marketplace. So it's going to be an exciting year ahead.
I agree. Hopefully we get a good rebound in the gold price too in the new year. I had one final question, which is, are you on cash costs for next year?
Sorry, Deborah, you cut out there a little bit.
Sorry, I was just asking for if you're offering any guidance to the market in terms of production, cash costs, anything like that.
We haven't offered any guidance. We're currently, with this drill program underway, we expect a resource growth and a new life of mine plan. So that'll be something that will be coming in the future quarters here. So until that, and until we have an opportunity to do a new life of mine plan on that, I think you'll see guidance when that is.
Okay. Perfect. Well, I don't see any other questions, so I think we could leave it there. Ken, thank you so much for your time, and congratulations on the recent quarter and exploration results. It's been a good 6 months since we met that you've really delivered on the project. So congrats, and I look forward to the next update.
Deborah, thank you very much for having us on, and of course, the Moss Mine and our employees are very excited to be telling the story. And so we're looking forward to a good year ahead.